What if the thing sitting in your wallet right now is quietly draining your future wealth? It's not a scam, it's not illegal, and millions of Americans use it every single day. In fact, it's one of the most common financial tools in the country. But for many people, it slowly becomes a trap. We're talking about credit cards. The convenience trap. Credit cards were designed to make life easier. Need to buy groceries? Swipe. Booking a flight? Swipe. Online shopping? Just tap your card number. No cash needed. And at first, it feels harmless. You're not actually losing money right away. Instead, you're borrowing it with the promise to pay it back later. And that small delay between spending and paying is where the trap begins. Because psychologically, people tend to spend more money when they use credit cards compared to cash. When you pay with cash, you physically see the money leaving your hand. But with a credit card, it feels almost invisible. And that makes it dangerously easy to overspend. The interest problem. Now, here's where things start getting expensive. Most credit cards come with high interest rates. In the United States, the average credit card interest rate is often around 20% or even higher. That means if you carry a balance on your card, you're essentially paying the bank extra money just for borrowing theirs. Let's say someone spends $3,000 on their credit card and only pays the minimum payment each month. Because of interest, that $3,000 can take years to pay off, and during that time, they might end up paying hundreds or even thousands of dollars in interest, money that could have been saved or invested. Minimum payments, the hidden trap. Credit card companies make it look easy. Your monthly statement shows something called the minimum payment. Maybe it's $40, maybe it's $60. It feels manageable. But here's the catch. Minimum payments are designed to keep you in debt for as long as possible. When you only pay the minimum, most of your payment goes towards interest, not the actual balance, which means your debt shrinks very slowly. And while you're paying it down, interest keeps building in the background. Why millions of Americans struggle? Today, millions of Americans carry credit card debt. For many people, it starts small. A few purchases here, a few purchases there. Then an emergency happens, maybe a car repair, maybe medical bills, and suddenly the balance grows larger than expected. That's why credit card debt can quietly follow people for years, not because they're irresponsible, but because the system is designed to make borrowing easy and paying off slowly. The smart way to use credit cards. Now here's the important part. Credit cards themselves aren't evil. In fact, when used correctly, they can actually be useful. They can help build credit history, offer fraud protection, and sometimes even give rewards or cash back. But the key rule is simple. Never carry a balance if you can avoid it. Use your credit card like a debit card. Only spend what you already have the cash to pay for, and pay the full balance every month. That way, you avoid interest completely. Final thought. Credit cards are powerful financial tools, but like many tools, they can either build your financial future or slowly work against it. The difference isn't the card itself, it's how you use it. Because sometimes the biggest financial traps don't look like traps at all. They look like convenience.